So, should we buy or sell Ritchie Bros Auctioneers? So, first off, read this disclaimer carefully. Then do your good deed of the day by liking and subscribing. Here is RB Auctions website. Yeah, bringing a world of buyers. And here you can see two vehicles that are at reduced prices. So let's see what happens if I go here to this link. Um, yeah, so here I can easily see the prices and pictures of the various vehicles. These are in Poland, Florida. So this stock is in a theme that I call self-storage and auctions. We do see that the RBA is 24-ish% from the 52-week low and 17% away from day highs. Let's look at the chart. Okay, going way back, and we can go back here all the way to 1998. If you bought RBA, then you would be looking at a 1614% gain. That is pretty good. The problem, though, after you have had big moves, um, future expectations of growth, might be a bit reduced. We looked at the website; it didn't exactly look state of the art. So, that's it means that Ritchie Bros could be disrupted by someone who is a bit more innovative. But no reason to panic yet. It's just that the reason why I like to look at websites is because it's a bit of an indicator of how forward-leaning a company is. And when I do see that the website looks very dated, question is, okay, how much of their other investments that they made in the past are now dated? But yeah, here's the chart. We have seen a rally, but we are getting into resistance from the green 50-week moving average and the blue 100-week moving average. Looking at the daily data points, this is where we have a very clean, squeaky clean resistance level. The blue 100-day moving average, just super clear resistance as long as we are below it. I would say technically this is just bearish. On Friday, we clearly got into trouble here. We didn't get above it. So I think that this is just too clean, one way too clean. So that is the line in the sand. Let's look a bit here at the RSI and the PPOs. So we are sort of in the neutralish territory here on RSI and PPOs. Going to daily data points, we are sort of pushing it a bit here. We are not overbought, but we are at a level where future bullish expectations should be a bit modest. Accumulation distribution, though, is still relatively strong, which could mean that the odds of a breakout is not that low. So in this case, I will say that we are at 100 DMA resistance, very clean resistance level. But in this case, I think I will give the bears only 4, simply because of what we did see here in accumulation distribution. There is some buyers here pushing. Also, we aren't really overbought yet. We are a bit in dangerous territory, but yeah, overall it's more bearish than bullish, but I will give them a bit of a modest bearish score on the technicals. Next is the seasonality for RBA. So to the left, we do see that there is weakness expected into later January. So far, we have 4% gain for January. We can see that historically here in the table, January usually isn't a bullish month, but when it is bullish, it can be very bullish, like in 2018 and 2019, and also 2011, 2012, and 2013. So January is very messy for RBA. February, recently it's been a bad month, and the March is also relatively weak. Except the times when it's strong, then it's really is strong. So the seasonality for RBA is messy, but I do think that it leans a bit bearish. But here again, I would say just a bit bearish, so -3 here to the bears. Next on the list, we will look at the fundamentals. Looking at price book ratio, not really that high. So there could be more upside in terms of price book, price to sales, not in a dangerous territory yet, nor price earnings. So let's have a bit of a look here at the price projections for the coming year. So when it comes to yield, you do get a 1.8% dividend yield, which is okay, but not like a yield that is so big that you want to hold on to the stock no matter what. So 7 analysts have a 1-year price target, and here is where it gets a bit problematic because the average price target is 3% above us, which is, of course, it is bullish, but a 3% potential upside is not going to attract new investors, and that's a bit of an issue. The 16% max price target is, of course, good, but the average is the most important here, and you also have this minimum price target of -8.5, so here you have analyst ratings. You do see that there's a majority actually of holds, so 4 holds. So overall, the fundamental data was bullish, but very weakly bullish. I will give the bulls a 1 here on the fundamentals. Okay, let's look at relative performance. Weekly data points. We have 69% positive correlation with S&P 500, 68% with industrials ETF XLI, -5% with the dollar index. When we go to the daily data points, we have 36% with S&P 500, -30% with industrials, 26% positive with the dollar index. So in this case, the strongest correlation is with the S&P 500. I'm a bit surprised. Let me just have a bit of a look here at the IWM. So in this case, we do get 65% and 34%. Let's just quickly look here at the market cap here for the company. 6.6 billion. It's not really a small cap though, so that doesn't fit the bill. So I guess the strongest correlation we do get is with the S&P 500. Okay. I mean, the S&P 500 is going to have a big effect on all kinds of securities, so it makes sense to look at the S&P 500. You could make the case that this is a shoulder, this is a head, and this is a right shoulder. That is a bullish technical pattern, but this inverse head and shoulders pattern is messy. It's not like a textbook bullish one, but it's okay. The green 50-week moving average is a problem here for the bulls. Looking at the daily data points, oh, they are fighting the big one. They are really duking it out with the all-important. Yeah, if I can expand, sometimes I have issues with trading view. Okay, and I'm now on the most expensive trading view subscription. There is one extremely annoying thing about that super expensive subscription, $700 a year, is that you do not get live data. You actually do not get live data. That is very annoying. You do get partly live data, but you have to pay for real. Yeah, it's yeah. Okay. We are duking it out here with the red 200-day moving average. It is very important. It's been a major issue for the bulls in the past. Very good for the bears. Let's look a bit here at the seasonality for the S&P. Yeah, the thing is that we usually have a weakness from December to January. We have now had strength, so there is a disturbance in the force. Here I am comparing RBA against the SPY. So we did recently test the low-ish end of RSI, and we usually then explore the higher end. So Ritchie Bros could actually outperform the S&P 500 more based on that pattern. Looking at the daily data points, yeah, could be more. Let's look a bit here at the seasonality. So going forward into early February, Ritchie Bros usually outperforms the S&P 500. For January, we have 0.54% outperformance. February, back in the day, as you can see, it was super bad for RBA, but recently it's either been green or extremely red, so the seasonality here is not really, well, it's very messy. The relative performance analysis here suggested that RBA could outperform the SPY more. I will give the bulls a 3 here. We end up with minus 0.8 in favor of the bears. The key level here is 100 daily moving average resistance. It's a key level. It currently is pretty solid resistance, but there were some signs that the bulls could be able to push through it. But currently, as long as we are below that level, it makes more sense to be bearish than bullish. We do have some time left. I don't think there's any point really in looking at the components of the S&P 500 as such. We usually look under the hood of the ETF. I think in this case we can look at alternatives to Ritchie Bros. You do have so for with Carvana, it's not, as far as I know, for buying and selling used industrial vehicles. It's more for normal cars, but Carvana, they do have a very modern system for buying cars online, so that's very interesting. The chart here, it's showing some very potentially constructive behavior. This is a textbook rounding bottom pattern. In this case, we also have a bit of a confirmation. We have now gotten above the green 50-day moving average. Just from this level to the current level, we have a 50% gain. So the gains, they come very fast and furious from these low levels. But if we were to revisit the previous highs, we are talking about a potential, yeah, approaching a 6,000% upside. That's a lot of fun if we can get to that. But yeah, Carvana, it was extremely bearish, but now the bulls are doing something. 44% gain for January, so the January has been really good already. Then again, gains come very fast from low levels. Yeah. Okay, let's look here at the price targets. So 18 analysts have a 1-year price forecast. The average price target is 73% above us. Highest is approaching 600% above us. But the minimum is 84% below us. That is basically someone who is thinking bankruptcy. Analysts are very neutral though. Very, very neutral indeed. Let's look here at the price earnings, price book, price to sales. Price book is very low. Price to sales is also very low, so you could argue that there is value at these levels. So we looked at Ritchie Bros, Auctioneers, and we also looked at Carvana. I do think that Carvana, while there's been some substantial gains already from the lows, there could be a very significant upside. If you were to buy a stock like Carvana, you just have to be very prepared for big moves. These very suppressed stocks, they can correct just big time and also rally big time. So it's probably is a good idea to have smaller positions and rather have wider stop levels. So yeah, but this is more of a general thing. Some of the biggest opportunities you get from the more bullish side of the market That's to look at these super depressed stocks because when they rally, it's just they can rally with a vengeance.